Hey, everybody, welcome to my live stream. In this live stream, I am going to be going over some companies that announced their earnings today, as well as a couple of extra companies. I know the community members nominated one company, which was HII. I'd like to take a look at HII and take a look at where their stock is headed, look at their fundamentals. This is a big week. We have the election tomorrow, and I already dropped off my ballot. I did that about a week and a half ago, and hopefully everybody that's voting in the U.S. gets a chance to vote and make their voice heard in the whole process. And I imagine 24 to 48 hours from now, we're going to have, I think, an idea of who won the election, and then we'll go from there to let that person take over the office in January and lead the country for 4 years. And we'll see how things go. I imagine tomorrow the amount of trading will be lower than typical because it is an election. And I imagine people are getting out to vote, as well as people are probably going to be interested in seeing the results of the election. So their minds are going to be principally on the election, understandably. We saw the China market go up today. Their day starts well ahead of ours here in the US. So China stocks went up nicely, which was good to see. On the US side, stocks settled down today. The Dow was down 0.61%, the S&P 0.28%, and then the Nasdaq was down 0.33%. The Russell did have a green number, which is good to see. Also, interest rates dropped, and that causes bonds to really rise in value. And I saw that as well today. So the stock market is probably going to have a slower week than last week. Last week, we had really big earnings, big, giant companies, and the week before as well. Now we're beginning to see companies that are not quite as big, but we're seeing more earnings this week, probably just from a number standpoint. On Wednesday, we're going to see 373 companies announce. And then on Thursday, 461 companies announce. Wow, that's a lot of companies. So it'll be a very big week. The companies that announced that looked interesting to me: Vertex Pharmaceuticals, Palantir, Zoetics. So we'll go through this list. And I also want to add HII, which will probably be the third stock that I take a look at after the first couple of them. So let me jump into Vertex Pharmaceuticals to begin with. It looks like their stock is going up. It had a decent day today, considering the market was down. Their stock did go up. This is a pretty good sized company, $122 billion in market cap, and the revenue is 10.61. So Vertex Pharmaceuticals Incorporated, a biotechnology company, engages in developing and commercializing therapies for treating cystic fibrosis. It markets Trikafta and Kaftrio for people with CF with at least one F508del mutation for 2 years. All right. So they're really focused on an area. Looks like people really appreciate what they're doing, and especially the patients that need their treatment. Looking at the company, they've been growing. They're now a $10.6 billion company, and they've been growing at about 10%. Looks like they already have the numbers loaded in stock analysis. So in the most previous quarter, they grew 11.61%. That's good growth. That's a pretty good sized company, 10.5 billion. So the growth is there for Vertex. Looking at forward PE is 26.83. Looks like they're running at a loss this year. Analysts think the stock is discounted by 7.41%. And over the past year, this stock has gone up 25.68%. That's a pretty good return. For the last 5 years, it's up 135%. So that's an excellent return. So this company is doing well. It's a healthcare company. It's a biotech company, and they're doing a nice job rewarding shareholders. Over the course of 5 years, a shareholder would have more than doubled the value of the investment they made over the course of 5 years. So we saw that the revenue is growing, and they are losing money. It may be a paper loss. So earnings. I'm not quite sure how to read this number, but overall they lost money. So that's not good. Let's see if they created positive cash flow in the trailing 12 months as well as the previous year. So looks like free cash flow last year was positive at 3.337 billion. And the year before it was almost 4 billion. That looks good. They're not generating a whole lot of cash. So this is a really well priced stock, meaning it's probably a little expensive, because to get to their valuation, you're going to have to multiply that number close to 40 times. And they're only growing at 10%. So it's not a high growth company. It's a good growth company. 10% is good. But geez, that's a pretty expensive stock if you value the company based on free cash flows. If you look at earnings per share, Vertex is, some analysts really like it. 23 analysts cover the stock. One thinks it's a $600 stock. It's at 472. And one analyst thinks it's only worth 373. On average, they think, hey, it's sold at a discount of 7.41%. Now, looking at their earnings per share, it's really going to go up next year. So they lost some money this year, but they were making money in previous years. It's going to be $19 per share, looking at 2025. So that looks really good. And then from there, it's not going to grow a whole lot in 26. And then in 27, it's going to grow a little bit more. Overall, just they're not creating enough cash flow for me to be really interested. I have other options within healthcare, within biotech companies that are generating far more cash and better growth. So I like those options more than Vertex. I'm glad the stock's going up for investors, but this one just doesn't look as good as like Catalyst Pharma or United Therapeutics, or even the likes of the big pharma companies, Novartis, Eli Lilly. Those companies are doing really well, and you can get them for less than the price to free cash ratio that this company is offering. So this one doesn't float my boat. I don't think it's all that exciting. But again, I'm glad for investors that they're seeing their stock rise 1.73%. Good luck in the future. All right, so that was Vertex. Let's take a look at Palantir. Palantir is up 12.19%. And it came down about 1.22% in trading. The last 5 years, it's down about 8%, and it more than gained that back in the after hours. Let's take a look at what they announced. But before I do that, let me look at a few things. It's a $92 billion market cap company. Its revenue is only $2.48 billion. So you're paying about, I would say about 20, 40 times revenue for the company, which is rather expensive. PE is 244, expensive. And then forward PE is 104. Analysts think it's expensive, that it's overpriced by 32%. Now, let's take a look at what they announced, because I'm curious to see what their top line revenue grew at. Okay, so Q3 2024. So third quarter grew nicely. Year over year growth was 30%. That's a very good growth number. It's higher than what they were tracking before, considerably higher. I think they were tracking at low 20%, and they grew at 30%. So that's excellent. Looks like for Q4, they're guiding that revenue is going to be about 767, which sequentially is going to be some growth sequentially. And I'm sure year over year is also going to be a good growth rate. So that 30% growth in the quarter, it makes sense why the stock's rallying. That's really good growth. And I'll show you on their historical information that their revenue wasn't looking all that exciting to me. It was in the low 20% range, and I'm comparing it to other software companies, and I'm just not quite sure why they're so popular if they're not growing faster. But 30% is very, very good. So the company, let's see if they turned a profit in the quarter. So for the quarter, it looks like they did turn a profit, which is good. It does have a very expensive PE ratio, and that looks good. And looking at cash flows, so cash from operations went up to 693 million in the first 9 months. They only buy a little bit of CapEx, plant, property, equipment. So they're right up there at around $684 billion of free cash flow. And if you look at that 684, boy, you got to multiply that number of times. Let me do that on a spreadsheet really quick. So 684, 92 billion in market cap. So you have to multiply the free cash by 134 to get to the market cap, which is really expensive. So it's a very expensive stock, and if they keep growing, I think they're going to sustain that stock price. I just what I think is, see how the previous trailing 12 months, 21%, 2023, 16%. Those numbers are not very exciting, but 30% is more exciting. I would have to say that about Palantir. And they impressed Wall Street, and they guided that they're going to keep doing well. So the stock is up nicely for investors. Congratulations. So Palantir is hot. They're growing. They do something that's unique. It's like a big data solution where they help companies really see patterns in data and try to get predictive analysis out of that data, which could really help companies. They also sell to the military. I think that's one of their most famous customers, where the Army is using their platform. Looks like Shadow Guy, thanks for tuning in. Looks like you've got a good comment. Hey, man. Palantir's commercial segment grew 54%. And their free cash flow is growing a lot too. Best quarter ever. Yeah. I know it's late in your day, so sorry I started a little late, but thanks for the comment. Most definitely, Palantir is doing well. 30% growth is impressive, and it really does set them up better. I think when they were growing at 12 or 16%, to me, it just looked a little too mediocre, but 30% looks impressive. So congratulations to Palantir stockholders. Dieter, good to see you. Thanks for tuning in. So that's Palantir. Looks good. Good earnings. Good job, Palantir. All right. So we went over healthcare. We went over technology. Now let's take a look at an aerospace and defense company. And this company, Huntington Ingalls Industries, they're actually a company that builds ships for the military. And it obviously is builds these ships over years of time, and the sale price is pretty high. This is a company that I've known about for some time, and I actually looked at because I was looking at aerospace and defense companies. I did a video. I ended up really liking Textron, liking symbol LMT, and but I did look at HII because it had a couple good metrics. For example, the PE is really low. So PE looks great. Forward PE looks awesome. The dividend looks pretty decent at 2.83%. The analysts do believe that it is discounted by 22%. That looks good. We look at their growth, the company is growing. That looks good. Now, what ended up, kind of being a showstopper for me, I believe, was debt. Let's take a look at debt. My computer is not acting very quickly. It's getting there. Let's try this. All right, so I can get debt here. Total debt 2.83 and cash is 10 million. So that wasn't it. Something kind of ruined the analysis, but maybe I didn't look at it correctly. Cash flow wise, so they're not cash flowing a lot in the trailing 12 months, but in the previous year it was very good. 970 million minus 292 puts them down at around $680 million of free cash flow in 2023. The current year is considerably lower. Okay. It just doesn't want to show me this balance sheet for some reason. Let me try to refresh the browser, see if it'll help. There we go. All right. So here's a balance sheet. They have only $10 million of cash. So debt is not a problem. I thought it was from memory, but that's what I get for trying to use my memory. I should write things down. Looks like, in general, the PE is really low on HII. The free cash flow is down. When we look at the market cap of the company, its market cap is $7.48 billion. Historically, their free cash flow has been somewhat growing. The free cash flow has been going up and down, but I would say it's, somewhere around 500 million. If I were just to kind of scan the numbers and say it's probably going to average out somewhere around 500 million. And at 500 million, with a company that's growing a little bit, it is a government contractor, so it does have a stable business. You could probably value the company at, 7.5 billion, which is exactly where it's at, because I'd multiply it times 15, which would get me to about 7.5 billion. So I actually think this company is fairly priced based on free cash flows. I think the 7.5 billion is a decent number. It's probably that's what it's worth. The earnings per share looks like it gives it a more favorable valuation. 8 analysts cover the stock. And the earnings per share is expanding really well, expanding by 13%, 12% in 26, 11% in 27. That looks really good. So I can see why analysts are really high on the stock. Again, this is an aerospace and defense company. These guys make these long-term contracts with the government, and the government, will sign to get ships made, and it might be a lead time of 10 years, but that's kind of locked in their order book really keeps them, growing and keeps the revenues pretty stable for a long time. So that's why the aerospace and defense companies tend to be sold at a premium. Probably older investors like aerospace and defense because it is a consistent, reliable investment. Younger investors probably want more growth and more upside, like a Palantir. But HII is a really good idea for an investor that's looking for a more stable investment, an investment that's going to do well, but maybe not double in value just in a couple of years. The last 5 years, this has not performed. It's down 17%. Over the last year, it's down 18.35%. Wow. It really dropped when it announced earnings. It's down 25% in the last 5 days. Wow. That's a lot. That's a big drop. And that's pretty severe. I saw the cash flows weren't as good. Maybe that had something to do with it. But I think this is a stable industry. They've been growing, year after year. If you look at their growth, and the trailing 12 months is showing growth. So I actually think it's a pretty good idea, a pretty good investing idea. So I'm going to put it on my watch list. So I think it's very investable, and you might be catching this stock at a low point, at a dip that is worth considering. Tomorrow we have an election, and if the Republicans win the White House, it's my opinion. I don't know how right or wrong I am, but if Republicans win, that usually means they really spend on military. And if the Democrats win, they still think the military is important. They just don't spend as much. They spend more on programs to help the population. Now, tomorrow, this stock may move just on what is perceived to be the election result. And we'll see where it goes. For the next 2 days, this stock may move quite a bit, may rise or fall. So we'll see. But it is an investment worth considering. I think one of the members of the channel asked for me to take a look at it, and I'm glad I did. Somewhere along the way, I did look at it, and I probably didn't look at it correctly, because now that I look at it, it looks like a pretty decent investment. And the PE looks really, really good. It's down to 10.77 and 13.64. It looks really good for next year. So overall, I like HII. I'm going to put it on my watch list. Right. Omar, good to see you. I'm not, lately I've been buying into Amazon. I bought some Amazon today. It went down. I've been buying into a couple of different stocks. I usually put them on Discord. I didn't put them today because I was really busy. But I would say Google is probably Amazon's my biggest buy lately. Brad, how are you, sir? Good to see your name. Hope you're doing well. Sergio, it's been a little while. Hope you're doing well. Yeah, Google I thought had good earnings and their stock sold off. I also bought some Google stock today. So I dollar cost average into companies that I really want to own. And Google is my second biggest position in my portfolio, and I'm still buying shares on down days. I thought that the earnings were very good. I think strategically the company is very, very well positioned. So I like Google. I'm going to keep buying their shares if they keep getting priced at a discount on a particular day. So, all right. So we went over a good aerospace and defense company. Now let's talk about Zoetics. This company has medicines and vaccines for animals, both pets and commercial livestock and poultry and so forth. So it's an interesting company. And I think they're down today, but I know that when they announced their earnings, it was received well, and then it sold off. Interesting. So they announced on November 4th this morning. And I could have sworn that when I looked at the stock this morning, it was rallying, but it's really sold off. The company has a market cap of 79 billion. Revenue is 9.15 billion. So not too bad. Paying probably about close to probably 8.5, 9 times revenue for the company. PE is a little higher. We just saw HII at 10 or 13. This one's at close to 33 for the current year and then 28 next year. Now, when we look at their revenue, it looks like they've already loaded the quarter that just closed. Revenue looks pretty good. The growth is good. So they're now a $9.1 billion company looking at their trailing 12 months. And free cash flow is good in 2023. I'm not getting a trailing 12 months number. 1.6 billion to get to their valuation of $79 billion. So one would have to multiply that 1.6 billion by about 55 or so, and that is an expensive stock based on cash flow. And looking at PE, their growth is good, but it's single digit. So I look at both cash flow and PE, and it does seem like a little bit of an expensive stock. Maybe the market realized that and sold it off quite a bit. It's down 3.72. It's down 4% in the last 5 days. So interesting company. It's got a pretty good valuation, but looks like it might be a little overpriced. What do analysts think? Analysts think it's actually discounted. So they think based on earnings per share that Zoetics is a really good investment. I think based on cash flows, it's expensive, and based on PE, it's expensive. So we'll see how that plays out. Over the past year, this stock's done okay, 8%. It's underperformed the market, and over 5 years, it hasn't done too well. If you look at the dividend, you would add about 5-6%. So this has underperformed the market, and it's still held its value, which is interesting. Interesting. All right. Bad Omen, thanks for joining. Let's see. Magnus Vestergaard. Love the channel. I'm curious your thoughts on REITs. You know, I was really surprised today with CTRE. REITs are doing well because rates are coming down, and rates really moved down today. But in the early trading today, CTRE is one of my stocks. So one day, and you see this little dotted line is, the previous day close. So CareTrust was up in early hours trading, and then I guess around 1 p.m. Eastern, the stock plummeted and it sold off, and it's down 4%. So that was collectively like a 7% drop from the high of the day to the bottom of the day. And I was curious to find out what happened. What did the CEO get hit by a bus, or what happened? And you see there's a lot of positive reports about REITs. REITs are doing well because interest rates are dropping. Now, this stock's been doing well for the year. It's up 43% even after this pretty good drop, and it pays a nice dividend. So the stock's been doing okay for the past year. For the past 5, it's not all that great, but for the past year, it's been awesome. This is a stable company. It has real estate that it rents out to facilities that house the elderly that need healthcare as part of their living situation. So it's been a good stock for me, and I was really surprised how it moved. Now, I think that REITs are a pretty good idea as you have declining interest rates, especially if you have some REITs that are quality REITs that have been beaten down. So this one here caught my attention today because of its big price swing. In general, I think REITs should be doing well. REITs are good for older investors, like that are looking for income and stable appreciation. Younger investors, not so much. I think, maybe younger investors, like I have 2 sons and one's 20, 24. They both have stock portfolios, and I would encourage them growth, growth, growth. Bet big, and those bets that work are going to make you a lot of money over the next 30 years. So, um, so REITs should be doing well with lower interest rates. We'll see how things play out. Yeah, Sergio Palantir is rallying. We covered that a minute ago. Is it accelerating its appreciation, or is it still around 12? Yeah, it's still around 12. Yeah, it's a good evening. They had a very good report. Revenue growth of 30% is very good. So if you own Palantir, congratulations. Marriott was down 1.59. And Marriott, you could say, is a little bit like a REIT, but they're more like a franchise or like a McDonald's, where they don't own the hotels. They actually just sell their branding and their business model to these property owners that own hotel properties. And the company over the past year, it's been doing well, up 34%. Nice. Over the last 5 years, up 100%. Very nice. Very good return. And of course, we know what Marriott's all about. It's, a good hotel business. The company is $72 billion in market cap. Revenue is 7.35 billion. So you're paying 10 times revenue. PE is a little high for this type of business, but it is what it is. It's a very recognized name, so investors are very comfortable with it. Analysts think it's fairly priced. I've looked at Marriott over the years, and it just never made sense to me, but it's done really well. So the revenue is growing nicely, 20% revenue growth. Man, I would think the market would be really happy with that. But maybe their guidance is that travel is going to begin to slow down. I don't know if that was their guidance, but 20% revenue growth is really good, especially since they've been growing really nicely. So before COVID, they were a $5.4 billion company. They got back to that number in 2022 and have been growing nicely off that number since then. Travel is doing really well, and especially business travel is now beginning to happen, beginning to accelerate. So I think that's going to help Marriott. I was in New York a couple weeks ago, and I stayed at a Marriott. So I'm helping them with their revenue. All right. So Marriott's, the revenue looks good. What's their cash flow all about? So cash flow has been growing, 2.7 billion. So 2.7, this is better than Zoetics, but it's still a bit expensive. It's probably around 30 times free cash flow. That is pretty expensive. For a business like this, the best I can do is 20 times free cash flow because they are growing. And I just, I think they're expensive based on cash flow. Looking at their gross margin, let's take a look at that. So their gross margin looks pretty good. Profit margin, gross margin is 83%. It's very good. That's because they don't really own the properties. They just offer up their brand, their business model, their systems. So that's a very, very good profit margin. Good job, Marriott. So Marriott looks good. They performed really well for the past year, for the past 5 years. Congratulations to Marriott stockholders. Looks like a good one. All right, bad omen. What are your thoughts on Supermicro? Do you think they'll get delisted? What are your thoughts? So Supermicro is, man, we only get a company like that, like, geez, every 5 years or so, where things just really fall apart, and things are falling apart for Supermicro. The fact that their accounting company resigned, that's a really bad sign. They're going to announce tomorrow. We'll see what they have to say. The stock did rally today after dropping a lot, like plus 40% drop in a matter of a week or two. And another investor on the Discord mentioned something that made sense, that maybe the short sellers are buying shares to get out of the position now that they've made money. That makes a lot of sense. They get out, they made their money, take the money and run. So maybe that's why the stock rose today. Will it get delisted? I don't know. There's a chance. There's definitely a chance. If they cannot get their financials certified, audited, and get an opinion on them, they will be delisted because the SEC requires that your financials be audited. So we'll see how that plays out, and just blows me away how quickly Supermicro dropped from having a value above $1,000 per share down to a lot less. So we'll see how it plays out. Constellation Energy. So Constellation Energy generates and sells electricity in the United States. It operates through 5 segments: Mid-Atlantic, Midwest, New York, ERCOT, and other power regions. It sells natural gas, energy-related products, sustainable solutions. All right, so it's a power company. Now, power companies have been doing really well because the AI expectation is power companies are going to become really, really, really valuable. I guess be able to raise their prices because data centers need a lot of power. So you can see the stock's up 93%. That's incredible. Over the last 5 years, it's up 351. Wow. What an investment. Now, I don't like utility stocks. I think they have to spend too much CapEx just to keep their business operating. These stocks have done really well, some of them, especially the independent power companies. So if we look at their free cash flow, negative. It's like these guys are supposed to be really, really valuable, but they can't generate free cash flow. So I don't like that. And it's principally because the CapEx is a big number. You can see that you have operating cash flows negative in this case, and then you have negative CapEx. And each year you have a lot of CapEx just to keep the power plants operating. Well, if you have to put that much money back into a business, to me, that's not a very desirable business. I'd rather not own one. But it's worked for some investors. And if you own this company, congratulations. It really dropped today. Holy smokes. It dropped 12.46%. Whew. Did they announce before the market opened? Yeah. So the market looked at their financials and said, whoa, that is not worth it. So it dropped 12.46%. I don't like utilities, so I wouldn't be an investor. But anybody who invested in this company is doing really well. Maybe they're trying to get out of the stock and get out, while they've made a lot of money. So Constellation Energy really dropping. Moving over to the semiconductor space, NXP Semiconductors. And what do these guys do? So NXP Semiconductors offers various semiconductor products. The company's product portfolio includes microcontrollers, application processors. Okay. Today, so in after hours, it's down 5.66%. Over the past year, it's up 30%. It's very respectable, very good. And then stock's up 100% over 5 years. So mission accomplished. Good job, NXP. The company's worth $60 billion, $13 billion of revenue. So they're between 40 and 50 times revenue, or 4 to 5 times revenue for the company is their market cap. PE is 22. Forward P is almost 17. Analysts think it's a good buy. Okay. So this business is doing well. Now, revenue has not been growing. It's flat in 23, and it's slightly negative in the trailing 12 months. So semiconductor, in my opinion, has just been really expensive. It's hard for me to hold semiconductors. I sold Broadcom probably a year ago to this point, just because they had run up so much. And I made money on it, but it just seemed to be too expensive and it kept going up. I also sold Qualcomm months ago, and then it came down in price. So I've been buying back into Qualcomm. On both Qualcomm and Broadcom, I made money, but it just seemed like semiconductor companies got way overpriced. And I may be right, but the market's taking those stock prices higher. And people who stayed in Broadcom and other semiconductor companies have made more money. And congratulations. I decided to get out because I thought those stocks were way overpriced and made money. So I didn't get greedy, but those who stayed made more money. And that's that. So semiconductors are working. This one's falling a bit in after hours. I do think this one is expensive. I think semiconductors in general are expensive. I am buying into Qualcomm. That's the only one that I found that I think is a good deal right now and is doing well, growing, and their semiconductors are really in demand. So, Brad, so let's take a look at this comment. Do you see VKTX up in high 70s pre-market? Yeah, interesting. So this is Viking Therapeutics. So down 13%. Wow. Yeah, a lot of volatility. What's going on? So I guess this is a company that's trying to be an obesity drug company. Hmm. I'm not quite sure what they do, Viking Therapeutics. So there's some mixed data on the effectiveness and maybe they're at clinical stage, so they're pretty close to getting FDA approval. And if they get approved, then they'd be able to commercialize their drugs. But maybe they're having trouble in getting that certification. And if that's the case, yeah, the stock would drop. They're trying to develop a weight loss drug. And there was maybe some news that could be bad news about the acceptance and approval of their drugs. If that's the case, that's really bad news. I would study it closely if you're going to be an investor. That's what caused those wild swings is in this business, if you get a successful drug, you make a lot of money. But the process of discovering drugs, going through the FDA process, getting the drugs to be approved and then for you to sell them, that is a long, expensive, and risky process. As we could see here, Viking is having a bad day, and this could really continue to go poorly. We'll see if they fix things and get back on, a positive path. Over the past year, the stock's up 500%. It's a $7 billion company. So it started as, 1/6 of that. So started at around 1 billion. And man, it's just really done well, but it's dropped substantially. Wow. The weight loss drugs have really, really caught fire. Wow. So whoever bought into this stock did really, really well. So yeah, Viking Therapeutics. It's got a lot of volatility. It'd be interesting to track that. All right, Diamondback Energy is an independent oil and natural gas company. Explores for gas and natural gas. It's up 11% for a year. Pays a nice dividend of 5%. Oil did have a good move today, and I think that's what sent some stocks higher. This one's up 2.25. It's down about the same amount in after hours. That's funny. But this is a pretty good market cap, 53 billion. And over the 5 years, this is up 100%. So this has been a good stock for investors. Way better than Chevron. This one just does oil exploration, which is risky, because if oil prices drop, these guys lose a lot of money because they can't afford to extract oil, because then you just lose money. So then just a lot of bad things happen. But if oil prices go up, these guys make a lot of money. So it's riskier, but it's really worked for the last 5 years for these guys. So good job, Diamondback. Now they announced, and did they announce after hours? Yeah, they just announced. So that's the reason. Oil prices went up, so they did well. They announced their earnings. The market didn't quite like it, so they sold it off by 2.37%. So oil, I think, is it's probably going to be priced higher, is my best guess. I think the oil price at around $70 per barrel is I think a little low. It could really rise to like 85 in my opinion, but we'll see what happens. This has been a good stock for investors and is having a bad evening after having a good day. All right, there's a lot more, but I mean, we had 176 companies announced today, and then 157 tomorrow. Tomorrow we have Ferrari is going to announce, Marathon Petroleum, Coupang, that's an interesting company, Cummins, which is an industrial stock, Microchip. And then on Wednesday, we have Novo Nordisk, a big pharmaceutical company, Toyota, Qualcomm, ARM, Gilead, Mercado Libre, CVS. So Wednesday is going to be a big day. And then on the 8th, Thursday, the 7th, Arista Networks, Duke Energy, Airbnb. I'll be really focused in on Airbnb. Fortinet, we'll see if they're taking market share away from CrowdStrike, since CrowdStrike had a lot of problems in security. Maybe Fortinet's taking advantage of that. Monster Beverage. There's a lot of companies announcing on Thursday, 461 publicly traded companies. Then on Friday, Berkshire. Hey, look at that. Sony. And Sony will announce way before the market opens because they're in Japan, so it'll announce pretty much in the middle of the night. Baxter, a healthcare company. So big week. And then we got more next week. So, so we have a lot to go over. All right. So it'll be interesting to see how things play out over the next 48 hours. And then Thursday we have a Fed meeting where it's expected they're going to announce that interest rates are going to fall 0.25 or 25 basis points. That's expected. That's kind of being priced into the market. So we'll see if that's exactly what happens. And then CVS is earning bad omen. Yeah, they're on the 6th in 2 days. I'll be watching that. I'll cover it. And we'll see what CVS has to announce. I think CVS is a good buy. I think they're discounted. But we'll see what happens on Wednesday. All right, guys. So that is it for my live stream today. I hope you guys all have a really nice evening. And if you haven't voted, please get out there and vote. Participate in the election. I already got my vote in, and we'll see what happens. And one last comment here. Let's see here. Michael Anthony. So Pfizer did really well. Their earnings were really, really, really positive in my opinion, but the stock hasn't really rallied a whole lot. We'll see when it takes off, but I thought they did really well. 33% growth on their top line is very, very good. All right, guys. Well, have a good evening. I'll talk with you soon, and good luck with your investments.